Hey y'all, so we opened a mortgage company about 3 months ago, 4 months ago, and to be honest, we really didn't see the huge interest rate spikes going. We started this path like about a year and a half ago, but we've learned three things recently that has really benefited our agents by having our own mortgage company. First, this is a legit mortgage company. It is a mortgage broker. They have a bunch of connections with different investors from the top investors in the country, which are usually the ones that the lenders that you use right now sell their mortgages to after they close them out. So we go straight to the horse's mouth. But one of the things I found most useful in this changing environment is rates. Our in-house lender gives us generic, top of the funnel kind of rates. Everybody's different. We're not lenders. We're not trying to get into all that, but we do know what the going rates are doing, whether they're up or down. And this allows us to have conversations with those buyers that are, holding on the fence. Two, we get everybody pre-approved, whether they're a lead, whether they're a client, whether they're a person from our SOI, a person from our SOI, because we want to know what they're doing and what the strategy is. Two is products. You'd be amazed at the different products that we have available to us. And the reason is we go straight to the investor to fund these loans, not to a middleman who has to be very conservative when they underwrite these loans. Like most private banks that fund with their own money, they've got to make sure that they write a loan so tight that the investor will pick it up and not push back on them. So they can't do a lot of these things. And lenders right now, the investors really want loans. As you can imagine, they had a great last couple of years. It slowed up. So guess what they're doing now? They're doing some cool stuff. For instance, we've got a product right now that if you're quoted, let's just say a 7% interest rate, for the first year, they'll do it at 5, and then 6 for the second, and then it rolls up to 7 for the remainder of your loan balance, 30 years or whatever it is. It doesn't really cost any difference, but it gets those people off the fence that can say, hey, I don't want to pay a 7% interest rate. Well, let's try and do a 5. And if you can refinance the next couple of years, it's super helpful. That's a little byproduct too. We have the ability to reach out to our clients and go, hey, your interest rate has actually dropped. Well, the interest rates have actually dropped. Hopefully this is coming up in the next couple of months. We can refinance you to a lower rate, which is the whole, date the rate, buy the house, or marry the house. The last thing is communication. I don't know about y'all, and I've got some really good friends that are lenders, and they're really good. They really are. But they're so good, they're busy. And they're so busy, sometimes they can't get back to your clients. I had a client that has bought 7 houses with me, and they told me last year, like, hey, I called so-and-so, and I couldn't get a response. And I asked the person about it, like, yeah, we're just too busy. So our person is dedicated and focused on our company's business. Of course, we'll write for other people, but they are focused on our agent's business to make sure that we give that consumer an exceptional experience. For so long, the lending business has been different or separated from the real estate business. And legally and ethically it is, but it's so much easier when you have both major parties focused and in communication. So if things come up, we can work around it. Last one I'll leave you with. We had a client that was had a little different income. He was in the movie business, so he made a lot of money at certain segments, and then he didn't have some money at certain segments. And guess what? The normal lenders that we used couldn't do it. They were too conservative. They didn't feel confident that he had stable income, even though he's had this career forever, and it was a $700,000 house, and he's putting down a lot of money. So he went to our investor and said, hey, what do you think about this? They looked at it, they manually underwrote it, and they go, yeah, this will work. So we were able to get a buyer in this market with high interest rates on a $700,000 purchase approved where other lenders couldn't. So I'm not saying we're better than other people. What I'm saying is we have the ability to be flexible. We have the ability to go straight to the decision makers to get this done. And that is what we need in this market. We've got to be flexible and creative to get our buyers the best rates and to get the best product. So this is what's helped our agents be super successful with in-house brokerage, mortgage brokerage. I know that your company may not have one. We'd love to talk to you and even extend some of our services to you. We're not just for our company. So if you're a good agent, we'd love to talk to you about maybe doing some mortgages for you too.